Hey everybody, today is February 19, 2025, and today we're going to talk about the stock market and where I see the stock market headed for the month of March. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so where we left off last time was left roughly around here, and basically I thought that as we approach the new all-time high, I basically said that I think we're going to be hitting this resistance level and probably testing it, trying to build support, something like this, right? Now we didn't end up end up going above new all-time highs as strongly as I thought. We ended up coming down a little bit, retesting the 50-day moving average, which is a silver line, and we actually held it. So you can sort of see we have this like mini ascending triangle pattern like this. So this is very bullish, right? And you can sort of see we have a larger one here, right? Over the last 3 months, 1, 2, 3, 4, 5, right? Something like that. So ultimately, on a technical scale, and also the RSI is still in the neutral territory, around 60, right? Above 50 support and 70 resistance, right? So this setup looks bullish and it looks like we're about to break up higher, right? And if you look at the bigger picture, right, let's get a clean chart. Things look really good. You know, we bottomed pretty much in late 2022 with a bit of a pullback in summer 2023. It's been pretty much uphill from here, right? And relatively stable. These moving averages are getting further apart, but it's still not as it's not as wide as what we saw during the 2021 rally, right? And that ended up coming down, retracing and retesting the 200-week, right? Let's look at the monthly. Yeah, so things look really. We're still in a secular bull market from the recession low of March 2009. You can see here we kind of went parabolic almost, and that ended up in a correction down to the 50-month, right? So for now, I do think that it looks very similar to where we were around here, right, back in 2013, 2014. It does seem like we can go a lot higher, right? With Trump in presidency, he's pretty much a pro-business president. The only thing that's a little bit concerning is him putting tariffs on. But for now, the market's been sort of shaking it out, right? That was something I talked about, like his tariffs. I wasn't sure like how the tariffs would, how his plan for tariffs would develop going forward. But it ended up being a negotiating tactic, right? And he ended up taking he put tariffs on Canada and Mexico, but he ended up taking it off or pausing it for like a month, right? After they end up acquiescing to his demands, right, of sending troops to the border to secure the border, stuff like that. So it does seem like the tariffs are more of a negotiating tactic and not something that he's necessarily serious about putting long term. So I feel like the market is sort of calling its bluff, which is why instead of it coming down, like I thought it could come down if the tariffs were worse than we thought it would be. But it seems like the market's calling the bluff and it's hitting all-time highs now, right? Or it's attempting to push up higher. And with the ascending triangle base I've been forming over the past few months, it does seem like this might rip up higher, right, over the next month. So that's something worth looking at. Now, some potential headwinds is, of course, we've been talking about this a lot, is the inflation data, right? CPI has gone up for the 4th month in a row, right? We were in this downtrend, right, last year, almost all of last year, until we hit September. And from September, we've been pretty much gone up all Q4. Our inflation CPI data is ticking up, right? And now we just had CPI data that now we're back at 3, which is where we were in June of last year, right? So obviously this is not good for prospective rate cuts. We just had a pause from the Fed. That was our previous decision, right? And so generally speaking, this is not very dovish for the market, but it does seem like the market might be predicting that this might be the local top, right? And this is not something out of the ordinary. We saw inflation sort of tick up a little bit early last year before coming down. So I think the market is hoping that 3.0 is the peak of this like temporary bounce higher in inflation, right? And you know, if this does come down more, we might get more cuts than we were predicting in Q4 last year, right? Part of the reason why the market tanked a little bit in Q4 of last year was that a lot of people were expecting that this year, 2025, we weren't going to have as many cuts as we were expecting. And for now, we've pretty much had pauses, right? Or that was the last rate decision, right? Was the pause. And so if we don't see CPI go down for the next data in March 12th, it's likely that the Fed will likely pause again. I don't think they're gonna raise interest rates unless this goes up like exponentially to like 3.5 or something, right? But I think that in terms of cutting rates, which is bullish for the market loves when the Fed cuts rates. I think that's going to be on hold until we start to see the data tick downwards, right? But for now, we're probably going to get a pause for the next Fed meeting, unless this thing comes down dramatically. But even if it comes down a little bit, if it starts to come down, I do think the Fed will likely pause because they tend to be more conservative and they're going to wait, right? So that is a potential headwind. Other ones that I've been mentioning is the possibility of a recession happening, right? This is the 2 and 10-year yield curve, right? Every time it inverts and then uninverts, it's followed by a recession, right? All the way back in the 1980s. You can clearly see the grayish shaded area are recession, most recently the COVID, right? And we've been inverted for so long since 2022, and we uninverted last year, right? In the end of last year. And so this is a very something that's concerning because we're inverted for so long. So the last time we were inverted for this long was back in the 1980s, right? And we had we had a pretty long recession. Although we do know that the market ripped up higher after this, right? So that's another potential headwind, is that this could be foreshadowing a recession. Doesn't mean it has to happen right away, but it could happen within the next couple of months, right? Maybe next year, sometime. And another potential headwind is the Fed funds rate, right? Like the cutting rates usually is preceded by a recession as well, right? Every time we cut rates after a period of elevated rates, we haven't had a recession yet. Last time we had it again was during COVID, right? They cut rates during March of 2020 to try to stimulate the economy after the market crashed. We still haven't had an official recession yet, although it feels like we've been in recessions, right, since like 2022 and stuff, with everything all the prices of goods going higher and cost of living going up. But officially, we haven't had a recession yet. But when the Fed cuts rates, it usually precedes a recession, right? So that's just something to think about. I'm not saying we're gonna have a recession that's gonna crash the market, but I like to think about possible bearish scenarios to kind of balance things out. But ultimately, I am bullish, right? Everything on every time frame, monthly, weekly, daily, the technicals, the moving averages, the fact that we're just grinding higher. And a lot of this is also on the backs of AI, right? Like generative AI, that's been like pushing the tech markets up as well, right? And which is of course pushing the S&P up. VIX has been coming down since we had some volatility over the last few months, but let's see, weekly, yeah, it's been coming down, right? So something I noticed is that when Trump was the president, his first term in 2017, right, you can see that we actually had record volatility. Like we hadn't had, you can see over here, in 2017 we had volatility that actually went below 10 VIX, right, which is very rare. Like, I mean, you just look how rare it is for it, right? So this is probably the lowest VIX on record since it started in the 90s, right, all the way down here. So if we do see volatility come down, obviously we're still a ways away from Trump's first term, but if Trump's first term does end up making volatility go down a little bit more, that could be great for the market and act as a positive catalyst for prices to go higher, right? But for now, things still look really good. We're hugging the moving averages, which is very healthy for an uptrend, right? We generally don't want to see the price move too far away too quickly from moving averages because it, like a rubber band, tends to snap back and overcorrect on the downside, right? Which is what we saw in 2022 after we had such a massive rally. Get a cleaner chart. After we had a massive rally following the COVID crash, we snapped back to retest these moving averages and pushed up higher, right? So this does seem pretty decent in terms of its sustainability. But yeah, just going to balance everything out with potential headwinds. But overall, the next thing we have to look for is, besides Trump's tariffs and his administrative actions, is of course the CPI, right? We want CPI to come down. We want the Fed wants inflation to come down closer to 2, right? Now we've been going up for the last 4 months now, right? And so we definitely want it to go down. Otherwise, they're probably likely to pause, and the chances of rate cuts this year is going to go down if either inflation doesn't go down or it just stays at this level. So we definitely want CPI to come down for the next level, for the next report, and we'll definitely keep you updated. So my prediction for next month is I think we're probably going to fulfill this ascending triangle and probably going to move up higher. But I think the market's going to be more cautious because, of course, there's a lot of potential headwinds that I just mentioned throughout this video. Yeah, so I think the next crucial thing is going to be CPI and the Fed's decision. But other than that, it does seem the technical seems like the market wants to go higher. So that's what I'm expecting for the month of the remainder of February and March. Is I do expect us to kind of take the next leg higher somewhere in this level, right? 600. This is SPY, by the way. 600, maybe up to like 600, 630 level, right in March. Move up higher and probably hit some resistance around this Fibonacci level, right, 640. So I don't think we're going to break above 640, probably going to hang around this level. If the CPI report is really bad, like it just gets hotter and hotter, the inflation, then we could possibly see a pullback to the moving averages. But for now, we are forming some good support at this level, right? We defended 100-day moving average, which is the gold line, right? This has been a strong level of support over the past couple of months, right? So, and we've been holding the 50-day moving average over the last couple of days, right? So I do expect these two short and intermediate moving averages to be strong support if we do pull back. But for now, it does seem like the market wants to go higher, and that's what I'm expecting for the month of March. So everything's looking good, minus a couple of headwinds that I just went over. But ultimately, I am optimistic for this stock market for this year and, of course, next month. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate your support. Thank you again, and have a great day.